morning, ladies and gentlemen. A very warm welcome to you on this lovely Friday morning at Market Today on Business Today Television. I am your host, Shail Bhatnagar. On the final day of this week, as far as the market is concerned, quite a bit of pain that is walking in from Wall Street as far as equities are concerned, but we'll deal with that later. You'll see this Nifty chart right in front of you. We'll also show the index comparative. There's been a very heavy sell-off that you see in the US, and that's primarily on because of US data in which we've seen a lot of companies such as Intel making plans to shed a lot of workforce because the business prospects that were expected to be 2, 3, 4 months hence are not panning out as exactly. In fact, all that it is doing is, despite the plunge in stock prices on Wall Street, it is also adding to pressure on the US Federal Reserve to cut rates. So a very fast and very rapid fall coming in on Wall Street. If you see Wall Street Dow Jones Index actually lost 500 points. The Nasdaq Composite Index was down 405 points, and the S&P 500 was down about 75 points. All put together, the losses totaled anywhere between 1.2 and 2.3% as far as Wall Street is concerned, and that weakness has traveled across Asia from Japan to India. If you see how the GIFT Nifty is trying to open, it's showing a downtick of at least 200 points. That's the broader frame of things. As far as the macros are concerned, the US 10-year yield has slipped for the 7th day in a row and is now sort of at 3.393. That is an indication that at lows of February 2, you are also seeing rate cuts being priced into the market. Now let's look at the Nifty and look at how our markets are shaping up. Yesterday you had the Nifty Silver Jubilee, 25,010 for you, 59 points higher, and it almost ended somewhere near the day's high, which was 25,070. It's a narrow trading range that the Nifty is in as far as markets are concerned. It's added a total of 600 points over the last 6 trading sessions, out of which 5 have been in the green. Now it starts with a back foot of about 200 points down as far as the GIFT Nifty is suggesting, and that, ladies and gentlemen, will test the mettle of our market. Remember, we've purchased almost all dips so far, whether they are local because of the debacle at national elections, whether they are budget led because of imposition of fresh taxes in the market and on capital gains, or whether they are led because of global environments weakening. All those dips have been purchased, and let us see what the market has to offer as far as today is concerned. So the moment you start at 24,800, let's wait for the first 15-20 minutes of the market, let it stabilize, look at the high and the low of the Nifty, and then probably take a call. Remember, we are already tracking the 25,000 August 8 Nifty call for you, which yesterday shut shop around at 135 rupees. Now let's look at what else is likely to happen in the market. Volume is seen low because not only are we on the last day of this week, we are also near record highs. So traders will be hesitant in sort of extending long positions, mainly because of the background noise that we are seeing coming in Wall Street, as of course you will see further selling pressure on the option side piling around 25,000 Nifty call. What else is eyed in the market? Of course, earnings. We've seen 2 major earnings coming in. Tata Motors, where the numbers were fantastic, a 74% rise in profit after tax for the first quarter, exceeding 5,500 crores. Revenue rose 14%, but the problem with Tata Motors is that it gave a muted guidance. Its outlook was weak, and of course EV volume sales have also dipped. We'll keep an eye out on ITC as well. Earnings have been flat at about 4,917 crores. Revenue has gone up by 7% to 17,000 crore rupees. Hotels have outperformed. A strong show has come in on the FMCG side, but it's the paper business that has slipped about 6.8% in the past quarter. A very sharp rise in agri revenue of ITC as well. So these are the 2 major stocks on the Nifty that we are looking at. As also, you will see a very strong reaction to major earnings today. FMCG giant Britannia comes up. Titan will be declaring its earnings, and of course, from the FMCG pack, we'll be having IDFC First Bank and two other stocks. The other one that I remember is UPL. So these are the broad markets that we are looking at. On the Nifty, we'll again bring that chart back for you, the daily one. On the Nifty, you see the 10 EMA acting as a major support, and the 10 EMA at the moment stands at somewhere like 24,750, 24,780, depending whether you see the exponential one or the daily one. Apart from that, there is seen a bit of pain as far as the Nifty Bank is concerned. Remember, it shut shop just flat at about 51,564 as far as trade is concerned yesterday. Well, it's below the 20 EMA, which is providing a resistance, and between 50 EMA, which now stands exactly at 51,000 points. So this is in this narrow zone of 20 to 50 EMA. 20 not letting it go up, and 50, let's hope, acts as a very strong support. You have a lot of put writing at 51,000 in the Bank Nifty, so a dip towards that should be purchased. As far as the Nifty is concerned, any dip towards 24,800, if you get it, 24,750 even better, that's the chance to bounce back into markets, and let us see how the first 15 odd minutes pan out. I believe Sakshi is now with us. Sakshi, what's happening on Wall Street? A lot of action, and of course a very sharp rise in US VIX as well.
Absolutely, Shail. In fact, it was overnight in the US markets that we saw stocks across the board fall sharply on earnings disappointment and weaker than expected manufacturing data particularly, which led the Nasdaq, which had already slipped in the previous session sharply, plunging even further, 2.3% in the trade. Now remember, S&P 500 and the Dow Jones also tumbled 1% and over that as well. So the Dow Jones ended 1.2% lower, Nasdaq 2.3%, and the S&P 500 also down by 1.4%. A sharp sell-off was seen across the board because the fears of US economy and the recession coming back in that economy are now resurfacing, and that is what led for the entire markets to collapse yesterday. Now the US 10-year bond yield also dipped below the 4% mark. Among commodities, we did see gold futures hovered around $2,500 a mark, while the WTI crude oil futures slipped below $77 a mark as well. Now closer home in Asia, Japan's Nikkei, which plunged 2.6% even yesterday, was down another 5% this morning. The Japanese bond yields fell by below even 1% mark on the fears of the interest rates continuing to hike from Bank of Japan. And Malaysia's Kospi also shed about 3% in trade. We did see Hang Seng down by 1.7%, Shanghai down by 0.25% as well. And following this, we've actually seen that the Gift Nifty is also indicating to a negative start for the Indian markets. They were trading at around 24,800 odd levels, hinting at over a 200 points gap down in the early morning session. And when we talk about the flows, the overseas investors have turned net buyers for the Indian equities after 3 days of sell-off. FPI's mopped up stocks worth about 2,089 odd crores, while we did see that the domestic institutional investors, they turned net sellers after 7 sessions of buying, and they offloaded equities worth about 337 odd crore rupees as well. But a whole host of stocks, some of them you already mentioned, Shail, but I'll reiterate some of the stocks that we'll keep an eye out on. Infosys is going to be in focus because Karnataka's Goods and Services Tax Department has now withdrawn the pre-show cause notice issued to Bengaluru-based software provider. So we'll just see how the stock reacts to that news today, because the news had come in last evening. Tata Motors is going to be important to watch out for. Of course, stellar set of numbers. Net profit increased by 74% to over 5,566 odd crore rupees in June quarter, aided by robust performance across Jaguar Land Rover. Revenues from operations also grew by about 5.7%, and we did see stellar set of numbers coming through for Tata Motors. The stock had slipped yesterday ahead of the earnings 1% odd or so, but we could see some revival coming back. ITC, of course, it is a diversified conglomerate. It reported a net profit of 4,917 odd crore rupees, and which was marginally up from the year ago period in the same quarter. But across the board, we did see several segments contributing to the earnings. Barring the paper segment, I think all the other segments did report growth here. Kalyan Jewelers is going to be important to watch out for. The jewelry retailer reported a 23.6% year-on-year surge in its net profit at 177.8 crores. Revenue increased by 26.5% at 5,535 odd crore rupees. Godrej Agrovet, the diversified agri-business firm, it reported a 22.9% year-on-year increase in the net profit at 131.6 crores. Revenue, however, dipped by 6.4% for the company at 2,350 odd crore rupees. Now, when we talk about Adani Enterprises, that recorded its first fiscal quarter profit at 1454 odd crore rupees, posting a growth of 115.8% in comparison to 673 crore rupees that was seen as the last year. Revenue from the operations also came in at 25,472 odd crore rupees. That was up by about 12.5%. Thermax is going to be important to watch again. The energy and the environment solutions providing company. It reported a 96.6% surge in its profitability figure, which came in at 115.8 odd crore rupees, increase of about a 13% on its revenue figure as well. We also saw Surya Uday Small Finance Bank. The bank reported a 47.3% year-on-year jump in its net profit to 70.1 crores. NII has also surged by 40%, coming in at 293 odd crore rupees. From the railway pack, I'm keeping an eye out on Railtel. Railway PSU reported a 25% year-on-year surge in its net profit at 48.7 crore rupees. So we'll keep an eye out on that. NetWeb Technologies, the promoters of the company, Sanjay Lodha, Naveen Lodha, Vivek Lodha, and Neeraj Lodha, are likely to sell about 20.54 lakh shares of the company through block deals. So we'll keep an eye out on the company today. The floor price of the deal has been set at 2,180 rupees per share. It's a 3.4% discount to the current market price. So that's again we'll be keeping an eye out on. So these are some of the stocks that I'm keeping an eye out on, Shail.
Right, and it being Friday, ladies and gentlemen, as I had pointed out, trade will be muted. We'll be shortly joined by Mayuresh Joshi, Head of Equity Research at William O'Neill India, and of course by 9 a.m. We'll have Mitesh Panchal also coming in. Sakshi, I think we'll keep an eye out on Tata Motors in particular. If you remember, it's a stock which has sort of run up very sharply if you look at the last 3-4 months performance, and the earnings, as you've mentioned, in terms of the actual numbers, they've been pretty good, but it's the stock that needs to be watched. So far in the calendar year 2025, Tata Motors has gone up by about 46%, and I also want to see ITC. If I remember correctly, ITC is flat, about 7-8% uptick that we've seen, actually 6.8. So these are the two things that I have in mind as far as the performance is concerned. We'll also keep an eye out on Britannia. Britannia has appreciated to the extent of, let me get that number for you correctly. Britannia is up 7.4% so far in the calendar year, and this needs to be watched. This is at a record high, ladies and gentlemen. It's one of the first stocks that decided to move, and this is basically the 2 or 3 stocks that we'll be looking at. Remember, the dip will be somewhere like 24,800 as far as the GIFT Nifty is pointing out. That is exactly the 10-day exponential moving average, which is going to provide a support to the Nifty. Only time will tell. We'll be keeping the first 15 minutes of Nifty's high and low as far as the view is concerned, and then probably move forward. 8:47, we are waiting for Mayuresh to join us, and we are also looking at brokerage reports. Sakshi, do you have some? I believe there's one by CLSA on ITC.
We have a ton of them. Jeffries on Dabur has come out with a retaining of a buy target with a revised price target of 740 rupees versus 660 rupees. So that's something that we'll be keeping an eye out on. The FMCG companies are making a comeback after the earnings on the brokerage houses radar. On pharma space, Jeffries has a report on Sun Pharma. They have raised the target price to 2000 versus 1785, and EBITDA is also ahead of estimates for Jeffries. So that's something that they like within the earnings. Jeffries came out with an earnings report on ITC as well. They do see a high valuation comfort with a target price of 585. They believe the cigarette volume is in line with expectation, and most of the business should see an improvement going ahead as well. Jeffries has also raised the target on Zomato. Remember yesterday the company came out with the earnings. Their new target stands at 275 versus 230 earlier. They do believe food delivery on a sequential basis has growing well ahead of estimates, and even the Blinkit performance was unexpectedly strong. They believe the company is now planning to reach 2,000 dark stores, which was also ahead of the estimates. CLSA also came out with a report on Zomato with a buy report and a target price that raised to 350 rupees. They in fact have said that the Q1 is well above their estimates. Notably, Blinkit has seen profitability improve despite the rapid acceleration in the dark stores. But there's a negative report on Max Health from Macquarie. It sees a 40% downside and underperform rating with a target price of 560. They do believe that's an all-round miss on consolidated as well as pro forma performance of the company. Stable volume growth, while RPOB has also moderated. The new capacity and acquisitions will dilute profitability going forward is something that they say. On JP Morgan's report on Tata Motors is also important to see. They have an overweight rating with a target price that they've raised to 1250 post the Q1 consolidated EBIT, which is in line, but JLR surprise expectations coming in through. Jeffries in their review has again raised the targets to 1330 for the company. So these are some of the reports that we have. I think we do have now Mayuresh Joshi now joining in, Head of Research at William O'Neill India. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Well, a whole host of earnings coming through. Let me begin by understanding from you, how have you assessed at least the two most important earnings we are watching out for, Tata Motors and ITC today? How are you looking at them?
So the expectation largely is there should be a stable show as far as both these companies are concerned. A large part of Tata Motors EV portfolio should continue doing well. The expectations in terms of their MHCV part or segment should also continue doing well. The expectations in terms of a slew of new launches expected amidst competition. I think there is sufficient amount of demand. The only thing with OEMs actually is that the base for last year is relatively higher. So you'll have to moderate your expectations for this year. But they are addressing supply chain concerns. They are addressing the pricing concerns as well. And therefore, I think if you have a moderate year this time round, the next year will be a big one again in terms of earnings recovery. So decent set expected from Tata Motors. Same from ITC. I think the expectations in terms of cigarette volumes expected to remain stable. And nothing in the budget which probably propelled ITC in terms of budget moves as well. But the other FMCG part of the business should also largely hold up. The investments that they are doing in new business ventures, that will restrict cash flows to a certain extent. But I think the core performance, including cigarettes, including other FMCG, the hotels business should do well. It should be a stable show, even on the agri trading business, and that should show signs of improvement as monsoons progress in the next few months. So I think a stable show expected for both ITC and Tata.
Namaskar Mayuresh, a very warm welcome to you. Congratulations on the silver anniversary of the Nifty, and it's all possible because the goatee is back. There's a bit of silver there as well, and that's reflecting very well on the markets. More power and more wisdom to you, my friend. But let's now discuss the most important ones at hand. Sakshi's pointed out two, Tata Motors and ITC, and I'm a little how should I say, happy with the numbers that Zomato has come up with. Yeah. How do you see them? And already a record high 238, 239. Yesterday's close, the earnings came within dying moments of trade. Your view on Zomato?
Morning, Shail sir. No, I think it has been a stellar performance over the last few quarters. And I think the performance is improving every passing quarter. And that is what the street will probably like. Now, the two legs of their business, which
Yes.
everybody talks about, specifically Blinkit and Hyperpure, the expectation largely is, as per the management, a couple of quarters back, at the end of the financial year, Blinkit should start contributing positively as far as the EBIT is concerned. And they're probably on track to do that. And even the losses in terms of the Hyperpure business are probably getting restricted to a large extent. And therefore, as these two business legs combine together with the food delivery business, and the expectation largely is that Blinkit will contribute much more in the coming few quarters compared to the other legs at this juncture, and specifically the food delivery business. With improvement in contribution margins, the cash flow and EBITDA should see very, very positive traction going forward. If you look at their competitor shells, for example, Zepto, I think the Series F funding raise that they've done is a fabulous valuation at this juncture. So I think these players will remain in focus as discretionary spending and demand factors improve even further in tier 2, tier 3 cities as we speak. From a price action perspective, obviously, the stock has moved significantly over the past 1 year. Our take is that the numbers will continue improving, that will get reflected in terms of return ratios and ultimately in price. So anybody holding on to Zomato should continue.
Right. Mayuresh also wanted...
Mayuresh, Sakshi, just one moment.
Sure, absolutely.
Mayuresh, if you could just go back in memory and tell us, when you joined markets, what was the value of the Nifty?
Not too sure, Shel sir. I think it was 2003 that I joined, 2003-4 that I joined the market. So it would have been what, 1,000, 2,000, it's 10 times, 12 and a half times right now.
Okay. So I'll get you the average number for 2003. Let's peg it somewhere in August of 2003 and look at the performance. I'll get back to you on that one. Sakshi, yours.
Okay, I just wanted to ask you, Mayuresh, have you paid attention and tracking the RPSG group of late? A lot of the stocks from the group have started to garner a lot of investors' attention. CESE is on the bus, of course, that's within the PAR theme as well. Philips Carbon Black, we did see some bounce in Saregama or First Source Solutions amidst the earnings. All of them are actually, in momentum right now. How are you looking at some of such stocks within the group?
No, so I think it's interesting because I think every company has something unique to offer. And therefore, I think if you look at the structural macro themes, power still remains to be a pivotal theme over the next few years, both in terms of government capex and expectations in terms of how these private entities are shaping up in terms of the opportunities ahead of them. Having said that, CSE and the grand expansion plans that they probably have in terms of renewables, they are on the right track in terms of both commissioning over the next few quarters. And obviously, I think expectations of the capex that they probably laid out to ensure that it becomes a largely renewable-driven company over the next 4 to 5 years. Now, as the transition starts taking place and as that transition is happening, the numbers are still reasonably okay. And therefore, I think if you look from a balance sheet construct as well, it is very well managed in terms of the capex dynamics, not creating too much of leverage onto the balance sheet as we speak. And as these dynamics transition towards the renewable space, I think it's going to be a big beneficiary going forward as well. Power demand ultimately is going to go higher and much, much higher. I think the peak summer demand this time is actually almost 230 to 240 gigawatts. So there is going to be incremental demand of power, which will still keep on coming through, which will benefit private producers and generators like CSC. So I think interesting group of companies that they've got, but I think as a structural theme, power and CSC will go to main focus.
Okay, so Mayuresh, I've just got the data for you. In August 2003, the Nifty was somewhere in the vicinity of 1200 points. It had slipped dramatically from the dot-com high, which was about 1900. And then, of course, that very famous rally started from 2004 to 2008 when Nifty went up to 6,500. So that's the journey, ladies and gentlemen, as far as Mayuresh is concerned, from 1200 to 25,000 in a span of just 21 years. The reason why we get this data for you right from the analysts and the experts view and experiences, so that you can realize how money has been made by just sticking to the long side of the market, avoiding dips, getting in and out of the market unnecessarily, keeping SIPs in place, and doing a phenomenal job. All three of us have a common friend, Sakshi and Mayuresh, and he was at our event in the Delhi event, Sakshi, 3 days ago, and
Budget
he mentioned
Roundtable.
that his SIP in a small cap fund, his SIP in a small cap fund has gone up to 4,000 rupees from 10 rupees. So you can well imagine the kind of wealth he would have created for himself by just sticking to his conviction. And by sticking to our conviction, we just mean three things: don't stop your SIP, stick into large cap, small cap and mid cap, pick one fund each, and just remain invested. Forget the dip. Sakshi.
Absolutely. Mayuresh, we had discussed with you the entire auto space again, but I'll come back to it again now that we have the numbers and the sales of most of the companies also out. What have you made of the kind of numbers that have come in? Maruti, M&M, and the sales figures too. And then tell us, afresh, would you look at it within the segment beyond Tata Motors that we've already discussed? What else looks good to you?
No, so as I discussed in my opening remarks, the base for last year, Sakshi, is absolutely high. So I think you'll have to moderate your expectations as far as the numbers for this financial year are largely concerned, specifically for the larger names, whether it's M&M, Maruti, or Tata Motors. And I think there is competition which is growing intensely in spaces, right? Whether it's SUVs, whether you're talking about electric vehicles, and maybe some competition brewing in the next few quarters in hybrids as well. So to that extent, the pricing will remain a little bit on the softer side. We've already seen a few price cuts taken by M&M and Maruti as far as a few of the models are concerned. So largely, I think this year will be a year of consolidation compared to the higher base of last year. But as I said, they are managing their supply constraints in terms of ensuring that their order backlog is very well serviced within timelines. Input costs have become far more stable at this juncture, which were at an elevated level at the beginning of the year. Obviously, as the recovery happens, specifically in China and the globe as well, there will be expectations of input costs reaching a tad bit higher, which should get passed through. But that will get compensated in terms of rate cuts happening, which makes it a little bit more easier for car loan borrowers to probably own a car itself. Therefore, I think anybody holding on to the frontline stock should continue holding. Our take is Sakshi, auto ancillaries should continue doing well. So in our estimates, both servicing the OEMs as well as the electric mobility stroke platform market and the replacement market that they have at their behest, where pricing remains in their favor, should favor a few of these auto ancillary companies as well. So I think we remain a little bit more sanguine and optimistic in this space itself. Varroc, as an example, is something that we continue liking as a long-term focus.
Right. It's a very modest downtick, ladies and gentlemen. Just 100 points off, 0.5% lower on 24,860 as far as Nifty is concerned. Remember that the GIFT Nifty was at one point of time showing a 200-point downtick, and the first tick on the pre-open on Nifty was actually 24,744, which happens to be the 10 EMA. Now let's look at the earnings, boys. I'm very keen to see what ITC is doing. 2% lower, 10 rupees down, 485. What is Tata Motors doing? 5 rupees higher, 1149. Let's pay attention to what the three index heavyweights are saying. Infosys, withdrawal of the GST notice because of the weakness and the beating on the tech stocks. The counters opening to 26 rupees lower, 1826. How about Reliance? 26 rupees lower, 3004. How about HDFC Bank? 7 rupees lower, 1631. A very quick move into the other Nifty stocks. Ahead of its earnings, Titan is 1.7% lower, 3410. And I just want to mark Britannia, 0.5% lower, 5700. This is what is going to happen in the earnings, boys, today as far as pre-open is concerned. A quick look into NSE 500. In this kind of a weakness, let's look at top winners. That will give you an idea about what the market is thinking. Ladies and gentlemen, 3.5% higher on Zomato. This is the top gainer as far as NSE 500 is concerned, 241. Needless to say, this is a record high. What else is moving in terms of low value counters? Okay, all of these are high ticket. I don't want to mark them. Let's look at the most active ones. Okay, a 5% downtick on GMR Infra, 96.50. I'm not much concerned there. Let's look at the FNO stocks and see where is action on the long side. Godrej Consumer Product in the green, 1.29% higher. JK Cement in the green. ACC Dabur in the green. Dabur also recorded its earnings. So nothing much. We have actually now what the pain that the market was suggesting. 232 points lower on the Nifty, and all 10 index heavyweights are down. The highest loss is in ITC, 2.5% down. Infosys is 1.3% lower. How about ICICI Bank? 1% lower, 1198. Hindustan Unilever a percent lower, Reliance a percent lower, HDFC Bank 0.5% lower. All 10 down. Let us see where this settles. Mayuresh, what would be your thought process with a 220 point gap down on the Nifty? Is this an area where all those who've missed this uptick on the Nifty 25,000, should they enter?
Yes, I think if you've missed it, a gradual entry is warranted at these levels as well. And let's understand very clearly, I think there is sufficient amount of liquidity in the system. So I think if a dip comes even beyond that, I think it might not last that long. Are we looking at some structural drivers which should point out to a structural downside for the markets in general? You had seen some data points yesterday, sir, in terms of the jobless claims, the 10-year bond in the US dipped below 4%. But I think these data points are to probably sustain. I think you will get a rate cut in the US market to sustain the economy itself. So there will be some elements of action that the Fed will probably initiate, which might also create respite for the market. So yeah, I think having a partial entry into these markets at these levels is absolutely fine.
Okay, got it. Overall speaking, within the runaway sectors, would you still see there is enough and lot more steam? Say railways and defense, there are still some momentum stocks that we find here and there, even despite this, broad-based sell-off within the markets. But what is your thought process there? I mean, have you booked out completely, or would you look at a fresh in these dips? How would you process these two sectors?
So honestly, Sakshi, I think a few weeks or a couple of months back, we have looked out in most names out of the space because I think the price action has been a little bit too much for comfort. Yes, the structural drivers, as I'm time and again pointing out, order books are strong, they're executing well. The expectations in terms of more orders coming their way is something that the street will probably like. But you got only that much of defined capacities, and therefore I think if you work on your optimal capacity, it is that much of fixed asset turnover and top line growth that you can probably achieve over the next 2 to 3 years, unless you have a massive capex that is probably earmarked to ensure that the next 3 to 4 years the incremental sales improve by a significant amount. But that probably might not happen, and therefore I think the expectations in terms of the price, the earnings expectations over the next 2 years is factoring in the best case scenario for most of these companies. And therefore, the only risk, as I'm time and again pointing out, for all these companies within this sector is an execution risk. If they are not able to execute well for a quarter or two or some other reason, there can be a significant drawdown that can happen in stocks. So my take is that have some element of partial profit booking done in these runaway sectors.
Mayuresh, anything in the mid-cap and small-cap earnings numbers that have come in that catch your fancy? How do you see outperformers now lining up? Most of the first quarter is through, and we have the laggards now coming in. Any stock which you think has this ability to outperform over the next 8-10 months, a year or so, based on the earnings that have come in the mid-cap and the small-cap space?
Sure, sir. I think two companies actually stand out, which we discussed also, I think, a couple of weeks or a couple of weeks ago. One is Ceylon Exploration. Our own take is that the company has produced a very good set of numbers. My sense is that when you're probably looking at the new wells that they're probably drilling, the expectations in terms of the output that will come through, and even if oil prices and gas prices remain stable, the incremental output in terms of volumes that is going to be humongous over the next few quarters and years will purely take its balance sheet in a very, very healthier position. It's got a 2% yield to back it up as well. So, in my opinion, I think Ceylon gave a super solid set of numbers. The other set that probably did well within the power space is Torrent Power. Again, I think if you probably look at the construct for Torrent Power, the plants that they operate out of, it's a mix of imported LNG. They've got a few thermal assets as well. But one of their assets, the DGen power plant, which has a 1200 megawatt capacity, has not been utilized at all. And therefore, I think any significant improvement in terms of a tie-up to begin with, and utilization levels improving quite significantly, purely going on DGen numbers, if anything happens in the next few quarters, nothing has been penciled in over the next few quarters and years on what DGen might actually contribute. And that can be a significant value addition in terms of the earnings trajectory. We were all speaking about the power sector and how the need of power and generating more power is going to be an absolute necessity in the next few quarters. LNG price is very, very stable. If there is some improvement here, I think earnings can explode over the next few quarters.
Okay, let's also welcome Mitesh Panchal, who's now on board with us. He'll be tracking the technicals and derivatives for us. Warm welcome to you, Mitesh. Long time. Good to have you back with us. We've actually seen, in the interim, the union budget that's come in. We did see a sharp reaction downward. We did see a historic high yesterday, 25,000, and the global market impact that we are seeing today. How are you assessing these varied aspects within the markets one has to track now, and what are you advising your clients?
Good morning, Sakshi. Good morning, Shailji. Good morning, Mahesh Bhai. So, in short, you're talking about the roller coaster ride which we had in last 7 or 8 trading sessions, and that is going to be the mantra for 2024. Extreme volatility is there, no doubt about it. But within this, what is more promising is to look at, technically what we are spotting is those stocks which are into consolidation since last 3 or 4 years and which have not come out and gained so much. And 3 stocks stand out for that. One is Ambika Cotton Mill, which we have discussed at around 1700, 1800 levels, which is now trading at around 2000, 2100 level. That is very promising. Second is GMM Pfaudler. So that stock is looking very promising on the chart. I think in this gloomy atmosphere or a highly volatile atmosphere, it seems to me, or it seems to us, that probably the stock is heading for 1600, 1700 levels. And last but not the least is Vinity Organics. Above 2000 level, the stock is now looking very promising. As far as the indices are concerned, I think the recent low, that is 24,000, which the indices have made on 23rd of June 23rd of July 2024, is a very strong support. So till 24,000 is not been broken, I think it's a wild range. 24,000 on the downside, 25,200, 300 on the upside. So our approach is to be very stock specific and sector specific as of now.
Namaste Mitesh ji, a very warm welcome to you, sir. Between the time we last met and now, there's been a spectacular rally in the power space. Its attendant stocks such as BHEL and NTPC, as also Coal India within the PSU pack. When you look holistically across power, whether it is power producers, ancillaries to power, name 2 stocks where you think the momentum has now increased for the better.
Yeah, good morning, Shailji. For sure, I think the 2 stocks we have spoken about, I think one of the stock where we are extremely bullish is Coal India. Recently the stock has made a low at around 410 from 4th of June 2024. Since then, it's a higher top, higher bottom formation, and now we are talking about 500 plus levels. So Coal India is looking promising. With a stock of 500, one can go long. I think 586, 120 is going to be the new target. Since the stock is trading at an all-time high, probably the stock will extend its gain going forward. And second stocks which is looking very promising is Tata Power. If you look at the chart pattern of Tata Power, again recently it had formed a bottom at around 400 odd levels, Stock refuses to go below 400 levels on a closing basis, and once the stock crosses 465, probably will enter into a new trading range. So we are setting up a target of around 500 to 520 in Tata Power. So both Coal India and Tata Power is looking very promising in such kind of a correction which we are going to witness today. If the stocks are available at a lower level, one should definitely accumulate or buy.
Okay, Mayuresh, a quick one on Tata Power and Coal India.
So Tata Power has its share of underperformance, Shell, sir. And my own take is that there are a lot of things that are happening in favor of the company as well. Obviously, generation, the arbitration in terms of what happens with its power assets, specifically in Delhi. There has been moderation in terms of the power tariffs as far as their Mumbai assets are concerned. And therefore, renewables, getting into data centers, getting into electric vehicle infrastructure, I think all these things are going to be a huge positive going forward. It has its share of underperformance, but I think it should be consolidating, and there can be a huge element of outperformance in the next few quarters as far as earnings is concerned. For coal, again, blended realization should show steady state improvement going forward. It's got a very, very decent dividend yield to back up the price that coal India trades.
Right. Let's get in Mitesh to address how would you trade Zomato today after that 4.5% uptick that it is indicative of right now, post stellar set of numbers, as well as brokerage houses upgrades that are now pegging the targets upwards of 275 for the stock. It's already at a 244.5 in the pre-opening trade. Mitesh, could you unmute yourself, please?
Yeah, let me. Sorry.
Yeah.
No
Sure. Worries.
So about 252, it's a clear-cut buy call. So since the stock has not crossed that, so we'll wait for it. 244.50, what the pre-opening sessions is talking about. So I think we should wait for the stock to cross 252 on an hourly chart. So once it crosses that level, probably yes, it's a buy, and then the rally will extend to 280 or 280 to 290 levels.
Okay.
Okay, ladies and gentlemen, we have the numbers in front of us. A 234-point downtick on the Nifty. We are at 10 EMA. Let us see what happens. 400-point downtick on Nifty Bank, 51,180. IT index is 300 points lower, and worse, the Nifty 500 has opened 1.15% lower at about 23,244. Very quickly, the two numbers, ITC, just a rupee lower. This is getting very well absorbed by the market. 492.15. How about Tata Motors? Okay, 3.5% lower, 44 rupees down, 1100. The reaction is a little, how should I say, faster when it comes to the weak outlook, muted guidance, and of course fall in EV numbers. Okay, Infosys flat. The GST notice has been withdrawn, 1851. This is good news. How about HDFC Bank? Just 5 rupees lower, 1633. How about Reliance? Only 20 rupees lower, 3001. This is not looking bad. We are now at 24,800. Let us see whether prices will move sharply now from now onwards or not. NSE 500, most active counters. Zomato taking it away, 6% higher, 248. In terms of top gainers, Kalyan Jewellers, Lemon Tree, all up 1.5%. You have a strong move coming into Paytm, 498.05. Let's look at NSE 500 FNO stocks. Okay, Apollo Hospitals, Hindustan Unilever, Nestle, and Dr. Reddy's. So the market is moving into defensive territory. Advanced decline. At the moment, only 276 stocks are in the green, 1724 are in the red. Remember this number, 280, 1725. I rounded it off. All 19 indices are in the red except for the FMCG index. Therefore, we will look at Britannia. Therefore, we will look at Zomato. Very quickly coming to you, Mitesh. What do you want to do in Zomato? Should we buy it at current levels or should we sort of wait?
So, Shalji, let's wait for the first hour in the Zomato. I think if you are a compulsive trader, yeah, you can go ahead and buy the stock since we have talked about 252 levels. So the sooner than later the stock will cross 252. Technically, it's a buy. Now it's 253, 8.5% up. So it's a buy with a stop of 240. But I will wait for the first hour and then we'll take the call.
Okay, got it. Well, only the FMCG index is up into the green. Rest of the sectors have all slipped into the red, with the metals, auto, realty dragging over 1.5% each. Even infra, PSU banks, the broader markets, they are also lower in trade. Broader markets also down by over 1%. India VIX has rallied 3.4% right now, 13.4. But it's the FMCG stocks that are ticking higher. Now the index is 0.5% up in trade. Even within the 5-6 movers within the Nifty, that's all that we have. Rest of the stocks are down in the red. You have at least 3 names from the FMCG pack: HUL, Nestle, ITC, and you also have Tata Consumer Products right now. Let's get in Mayuresh into the conversation. Mayuresh, FMCG, do you think the markets will turn defensive? Is it the time to build on a portfolio with far more FMCG stocks now, be a little bit more defensive because of this volatility that's underway?
I think that's a sane strategy, and you should be hedging your positions partially with FMCG, a few of the IT stocks as well. I think we had that discussion a couple of weeks back. Having said that, I think the expectations of good monsoons will definitely propel both volume and value growth forward. I have heard a lot of managements, including the Dabur management, including the Godrej Consumer management, including the Colgate management, which are expecting decent recovery happening on what we've probably seen because of and the expectations of the good monsoons getting spread around. And therefore, FMCG as a space remains very, very attractive at this juncture. Right, markets with India, I think the latest addition on our global portfolios that we've done is Jyoti Labs. I think decent set of numbers, expectations in terms of both fabric care and personal care expected to inch higher. The retail spread is increasing every quarter as we speak. And therefore, I think the modes that they probably have in their business segment itself should ensure that earnings growth can remain stable and continue to grow at a good pace. So yeah, very interesting space, Sakshi. I think you should be hedging your positions with a few of the FMCG.
Sakshi, it's Zomato. It's just taking it away. Now up 8%, 252. Needless to say, this is a record high. And we've already had 1,000 crores traded on Zomato as far as volumes are concerned. This is a phenomenal set of performance as far as markets are concerned. Tata Motors is still weak, but what is buzzing is ITC. Coming back to Mitesh. Mitesh, what would you do? What is the buy level on ITC that you see now coming up?
Okay, so as far as ITC is concerned, if you look at the daily and the weekly structure, the stock is already across its immediate resistance levels of 480. So Sanjay, it's anyway it's a buy because 480 has already been taken over. So now we are looking for what, 525, 550. So yeah, at 497, it's a buy with a stop of 480 for the potential target of 525 and 550.
Okay. In fact, Zomato, interestingly,
Sakshi,
Shail, that you mentioned out.
Nestle and Dr. Reddy's.
Yes.
Please continue.
I just wanted to add one point on Zomato, Shail, and that is the stock has already doubled in 2024. It's more than tripled from the IPO price as well, with this kind of a surge coming in. And of course, this is all thanks to the earnings and the profitability that's actually grown multifold times yesterday, over a 120 times kind of a surge that we've seen in the profitability figure. Your share.
Yeah, let's just Sakshi drill down into FMCG because the market is for the moment defensive, and it's also taking this opportunity to buy the 10 EMA on the Nifty, as also it's looking to buy the 50 EMA on Bank Nifty. Remember, 51,000 is a very strong option support for Nifty Bank, around 50 EMA, and of course 24,744 that you saw in the initial 1 or 2 seconds of trade is the 10 EMA that is active. Let's for the moment, I know this sounds really odd, but look at the Nifty contributors, and that is where the story lies. ITC is contributing 9 positive points to Nifty. Hindustan Unilever is contributing 6. What's pulling the Nifty down Ladies and gentlemen, ICICI Bank 26 points to Nifty's negativity, L&T 22 points, Tata Motors, Maruti, and of course Reliance 19, 19 and 15 points. I'll also mark the advanced decline again. Remember, it was 280 and 1725. Now it is 380, ladies and gentlemen, and 1707. What is the low on Nifty 500? At the moment, this is 23,336, and let me just check out the low on Nifty 500. Only 880 stocks are in the green as far as Nifty 500 is concerned. Now this low is 23,226. Please keep that in mind. From there, Nifty 500 is up 100 points. Keep this thing in mind as far as trade is concerned, and it's a sea of green that I see, Sakshi, and that is easily available on the advanced decline ratio that we see. Mitesh, anything that catches your fancy? We'll wait for the 15-minute candle on the Nifty and then take a call.
Yeah, see, two stocks. First is, I think the fertilizer space is buzzing. So Chambal fertilizer is looking promising right now. And second is the big boy HDFC Bank. I think today will also support the index above 1650. The future is sitting at 1653.54. So 1650, there is definitely a breakout. So we can watch out for HDFC Bank to taste 1680 today. So Chambal fertilizer and HDFC Bank is looking promising.
Okay, got it. Let's look at a whole host of broader markets performers at this point in time. Sale and exploration, something that Mayuresh was pointing out, is up at 10.5%. This is for the second day in a row. We've actually seen a 20% uptick yesterday. The stock has been in momentum, and today again another 10% higher in trade. SJS Enterprises within the broader markets is about 10% higher. Zomato is now 10% up in trade. You also have stocks like Ujas Energy, that's up 5%. And then you have TIL, that's up 5% as well. Let's also look at Hind Rectifiers, GET and D. These are the stocks that are up 5% in trade. Anything else that we can mark? No, nothing else that we can mark. But sale and explorations, could you expound upon, and tell us, Mayuresh, as to, for a fresh investor right now looking to build an energy, basket within their portfolios, how should one look at Ceylon vis-a-vis the other oil and gas refinery names?
No, so I think upstream should do well. I'll give you a very simple reasoning, Sakshi. I think if you probably look at the oil and gas minister's statement, and even if you discount the kind of capex that the minister has spoken about, he's spoken in excess of $60 to $80 billion to be spread over the next few years. Obviously, the reserves capacity that India has is almost 633 in terms of oil equivalents, and almost 1,000 in terms of the gas equivalents in terms of BCM as well. We've just explored 10%. He wants to take it to 16%. And therefore, the new wells that Ceylon, as an example, has drilled, the expectations in terms of their new well field at Umrah, expected to go live in Q1 FY25. Volumes at Pakrol, Karjesan have exploded in the last few quarters in terms of volumes. And therefore, I think numbers will keep on showing a significant amount of uptick. At the same time, the balance sheet dynamics remain very strong, and the dividend yield at 2% means that the dynamics in terms of the management going forward are looking extremely strong as well. So there is sufficient visibility as far as exploration players are concerned, including the likes of ONGC, Oil India, as far as upstream players are concerned. One offshoot outside Ceylon on any decline, if there is a decline of that level, it will also be Gulf Oil, Sakshi. It's a proxy in terms of the entire EV lubricants ecosystem. They are developing the EV fluids. They are developing oils for data centers, which is a very, very small segment. But the best part about Gulf Oil is that they have got acquisitions and stakes in EV charging companies, which is going to be the big theme going forward as well. So the entire business transformation, as you're probably seeing in terms of EV fluids, data center fluids that they're probably getting into, the EV infrastructure space that they're getting into, the kind of numbers that they're posting in FY24, and the optimism of the management from an FY25-26 perspective as well, as this entire transition is happening, seems to be in the right space as well. Again, I think a 3.5% dividend yield acts as some kind of downside support. So yeah, upstream, selectively, Gulf oil on decline, something to build your energy.
Okay. Well, it's the shipbuilders and the defense-packed names that are making a comeback sharply. You have Cochin Shipyard, Mazagon Dock, all showing green ticks. And you also have Zen Technologies, GRSC, that's Garden Reach Shipbuilders, Solar Industries, all of them buzzing in trade right now. Mitesh, let's bring you in. How would you approach these stocks that are again at the day's high point despite the weakness overall?
Sakshi, the strategy is simple and boring. In all the stocks where you're sitting with a phenomenal gain, just use earlier week's low as a stop loss and carry the trade because it's a mad run and you never know when the mad run will be over. So once your stop loss is hit, you will make a decent profit. Anyway, you're making a decent profit if you're bought the stock at a lower level. But the best part in an aging bull market to survive is to use a very simple and a boring strategy, that is a trailing stop loss strategy.
Very easy in the market as long as you have patience and you follow 4 or 5 very simple rules. In a market which is fueled by liquidity, ladies and gentlemen, buying the dip makes sense. 24,845 on the Nifty. I am still waiting for 1 minute for the first 15-minute candle to lapse and then take Mitesh's view. But what is in the green, Sakshi? Of all things, HDFC Bank. The low today was 1631 and we have 1650. So you are actually seeing how the markets have making an effort to purchase this dip. Again, I will go back to the most basic ratio. Look at advanced decline. We started at 280 shares in the green. Now 680 shares are in the green compared with 1450 in the red. Remember, at that point of time 1750 shares were in the red. So this is how this dip is being purchased. Nifty 500, last time I marked the advanced decline ratio, 80 shares were in the green. Now 137 shares are in the green, and it's a rally that is being purchased into, led by defensives, Hindustan Unilever, ITC and HDFC Bank from Nifty. Remember the low on Reliance. This will also help you find out the trend in the market. The low on Reliance was 3003, now it is at 3008. The low on Infosys was 1838, it is still there. Look at the low on ICICI Bank, 1190, and now it is at 1196. So the dip in the market is getting purchased, and now the big daddy of them all, HDFC Bank, which is being used by traders and investors to push the Nifty higher, is contributing 12 points in positive to the Nifty. 9:30 for us, Mitesh. The first 15 minutes candle is in place. What would you do?
Okay, so in the first 15 minutes candle, what is clearly visible is a low, and that is in the Nifty future, 29th of August 2024 is 24,793. So what we're talking about is essentially 60 point of a 60 point recovery from the low. So yeah, definitely this is a very attractive risk reward. So with today's low, we'll definitely buy Nifty at the current level. Looking at the structure of HDFC Bank, we have talked about 1680 as the first target when it was trading at 1650. Stock is making a new high at 1664 in future. Yeah, so definitely Shailji, at 24,793 a stop, I will be a buyer in Nifty.
Okay. Right. A whole host of other stocks that are on the move within the entire F&O space. Info Edge is joining the party, 1.4% higher. We have M&M Financial that's up by 1%. This is beyond the names that we've discussed like HUL, ITC that are up and about. Dixon Technologies is also moving up, and Godrej Consumers. These are some of the stocks that are also joining the party apart from the FMCG and the pharma rally that we are looking at unfolding. Let's get in Mayuresh into the conversation. Mayuresh, let's ask you on Dixon Technologies and this entire EMS space as well. How are you really looking at this? The budget is behind us, no big bang announcements as far as the PLI space is concerned. But, is this space still attractive enough?
Actually, the space is attractive because I think these EMS guys are doing and the runaway opportunity that is in front of them, whether you talk about Dixon, whether you talk about Gaines, Sirma, SGS, Avalon Technology. I think they have got the capacities in place in their own balance sheet rights to probably drive the market share gains that we are speaking about. The second aspect also is the entire semiconductor space that we are talking about and the assembling that is probably required. They're obviously doing the chip assembly at this juncture, and therefore I think the expertise that these guys have can probably get extended to a lot more spaces as semiconductor becomes a huge opportunity for domestic in-ground players. And you've already seen investments that are happening within this space itself. The third angle obviously is going to be valuations, and valuations are not at all cheap for any of the players within the space itself. As a disclaimer, we are holding one stock within this space at lower levels, but we are holding that at lower levels, and we might be having some inclination to probably book out if there is any further increase in terms of price action. And therefore, I think, like has been the case with a typical broader market as well, this space also probably a little bit overheated in terms of valuations. Price action has been significant over the last few weeks. Interesting space. There are structural drivers, but you need to have a pull off for a fresh hit.
Okay. Mayuresh, before we let you go, one very quick question on Hindustan Aeronautics. Delay in the delivery of the first Tejas aircraft. Do you think that will hit sentiment on the counter? Already it's corrected from 5,500 to 4,700. What are the zones where you would again step in to buy for the long term?
So maybe some element of correction more, Sensex. So I think if it comes down, and if it does come down to those 4,000, 4,100 marks, I think that can be some element of entry point. Obviously, this news has hit it sentimentally. But again, I think liquidity is very sparse in counters like this. And therefore, I think in a liquidity-driven and hungry market like this, I think if those levels come through, I think it will be covered back. So I'll wait for those levels patiently. If it does, well and good. Otherwise, I think there are other stocks to look at.
Okay. Right. Thank you so much, Mayuresh, for being with us on this show and helping us with all those wonderful insights. We'll keep an eye out on all the stocks and sectors that you've highlighted for our viewers, and appreciate you always for sparing your time for us and sharing that wonderful wisdom that you always do. And we will continue to monitor, as Shail will, whether the goatee has grown and so has the stock markets as well. Thank you so much for being with us. Well, all right.
It's a pleasure speaking with you guys as well. I think I have a wonderful time on a Friday.
Thank you so much. It was a fantastic Friday discussion with you too. Continuing our discussion with Mitesh now. You know what else has picked up pace within the F&O, Mitesh? It's the India cement stock, cement space as a whole. A lot of action unfolded over the last few weeks, mergers, acquisitions, competition rising, newer entrants coming in. Some more, consolidation could be in the offing in the coming months as well. Price hikes is something that we are all keeping an eye out on. Which is your top favorite cement stock as of now?
Technically, undoubtedly, Ultratech Cement. I think the structure is looking very promising. And if you look at the chart pattern of Ultratech Cement, I mean, stock has witnessed higher top, higher bottom formation above 11,500. Now the stock is eyeing at around 12,500, 13,000 level. So yes, Ultratech Cement is looking promising at the current level.
Right. Sakshi, I think we forgot to mark India VIX. At the moment, it's up 4.4% at 13.54. Let me just look at the daily picture of India VIX. Okay. Very interesting. It's trying to move above its weekly pivot level of 13.2. Let us see what happens. But a couple of points worth mentioning as far as the Bank Nifty is concerned. Remember, we are tracking the 50-day moving average on Bank Nifty, and today's low was exactly that. 100, almost there, and from then on you've seen a 210 point uptick as far as prices are concerned on Bank Nifty. A bit of a pause. The market is now consolidating around 24,800 as far as the Nifty is concerned, and I'd just like to mark a couple of statistics as far as the index is concerned, and this is on the volume that has happened within the Nifty. Okay, look at Aisha Motors, where weekly numbers were not up to the monthly number sales were not up to the mark. It is down 2.8%, 4,827. Maruti, again disappointment on the monthly number sales, which were at about 1.75 lakh units versus an estimate of 1.79. The counters down 3%. Tata Motors, disappointment on outlook, guidance, and weak EV sales, and of course Tata Steel 2.2% lower at 158.39. Miteshji, coming to you, fantastic set of numbers by Maruti just 3 days ago. What are the long-term charts of this auto giant telling you?
See, Shalji, the long-term chart and the trend is intact. About 10,500 on the quarterly chart, the stock has given a breakout, and since then the stock has run up. But now, since looking at the kind of structure the Maruti is attracting, probably slowly and gradually is the name of the game. So you won't see a marathon run in the stock, but slowly and gradually the stock will be approaching now 15,000 level. So any dip should and must be bought into. Today it's 3% down. Fantastic stocks to buy at 3% lower. Probably in the next 1 week, we will recoup all the losses, and probably the stock will enter into a new trading zone. So yes, at the current level, it's a buy with a target of 15,000.
Okay, just wanted to also mark Suzlon. The stock has gone beyond the 70 mark now. It's over 3% higher in trade. Of course, the stock has been consistently in the upward run up, and it's now at the high point of the day, 70.3 right now on Suzlon. Strong surge coming in on that. Mitesh, have you been tracking Suzlon in its upward rally, or are you staying away from this space?
No, see, Sakshi, typically when the rally is driven by liquidity, you see these kind of small stocks, small stocks are buzzing. And like, I mean, if you look at even the PC Jewelers, that is hitting an upper circuit since that 2 or 3 trading sessions. So, barring the fundamental aside or the story of the turnaround aside, one should be very careful getting into these kind of a stock. The reason is that once it's falling, they fall like a, falling knife, and you will see a deep cut. So the only advice, we are staying away from the stock, not advising the clients to get into. But if at all our viewers have a position into that, be very careful and disciplined with your strict stop losses, because you never know when the trend turns, and when the trend turns, Sakshi, generally these kind of stocks open with a lower circuit and will not give you a chance for an exit. So be careful with these stocks.
Great. Okay, understood. You know, all the underperformers. Yes, Shail, please continue.
Yes, actually, please carry on. Now the market's paused a bit. Please, mark the stock.
Yes. I wanted to ask Mitesh on the underperformers of the past coming back. You know, HDFC 1.3% higher, HUL that's done nothing practically for 4 years is coming back to the fore, about 1% higher in trade. Asian Paints, which is rather light low for the entire part of this year, is now coming back again. How are you looking at these big heavyweight companies which have largely stayed away from the bull run that we have seen so far?
Sakshi, this is the space where one should be in. But the unfortunate part is that since it is not offering any excitement and any quick return, so people are ignoring this. That's what I have talked about in the earlier remarks of the show, that all these stocks which have spent quality time in consolidation in last 2 to 3 years and have not performed is now going forward they will perform. And few stocks which I mentioned is about Ambika Cotton Mill, Vinity Organics, GMM Pfaudler. In this space, you can also, along with the Asian Paints or probably the HUL kind of stocks, you can also put Avini Supermarket, that is D-Mart also into. So I think yes, these are the spaces where one should be in. But as I said, since it is the stocks are not offering quick returns and they are slow movers, so probably market is ignoring, but one should be in the stock.
Okay, let's get back to the Nifty, ladies and gentlemen. Perhaps the low is being tested. Now we are at 24,774, 776 actually. Remember the low was 24,750. Let us see how this pain is absorbed. Now 242 points lower. So the intraday high is 24,851 and the intraday low is 24,752. So a 100-point move that is coming within the range. In any case, the Nifty opened gap down. So this is the 100-point range that is being now tested on the low. Let us see what happens. But for the moment, it's the India VIX that is taking it away, 7% higher at about 13.87. And Sakshi, the crucial part that I was trying to mention, the weekly pivot, it is now above that. So this is a development that has come in after many days, and this is something that needs to be watched out. Except of course we'll be watching Nifty's close today. Remember, it's rallied 600 points in a span of 6 sessions. Out of that, so far 244 points have been taken away from the market by the market. Let us hope sane sense will prevail, and by the end of the day you will see progress towards the green side. Nothing to be worried about. Mitesh, 9:44, 9:45, first half an hour of trade is upon us. Anything that catches your fancy in the mid cap and the small caps space where the dip can be purchased?
I think two stocks. I think Ajanta Pharma share is buzzing around 2,818 is where the stock is trading right now. So I think with a stop of 2,900, one can go long for the intraday. 2850, 2870 could be the target. And second thing, within the entire mid cap basket, one more stock which is promising, and since it is buzzing since last 2 or 3 days, PSP project. Above 710, the stock has given a very strong breakout. Stock is trading at a 720, so that is also a buy with a stop of 700 for the potential target of 750, 760. And last but not the least, from the FNO space, Syngene is also buzzing. Above 822, it's a very clear-cut breakout on 15 minutes and half an hour chart. So one should go long in Syngene with a stop of 820 in the current month, future at 825 for the potential target of 830 and 835.
Okay. Would you, Mitesh, look at Hindustan Aeronautics? This is something that a vast majority of people wanted to add to their portfolio. The most recent high is 56.74 that we've seen on July 9th, and on August 2nd we are at 4600. Of course, the background being difficult both for the IAF and HAL. There is a delay in the delivery of Tejas first aircraft, which was slated for 31st March. We are on August 2nd and there is still no sight on it. How are you seeing this mild breakdown in price, and where do you think will long-term support come in?
Okay, so if you look at when the first time the stock has hit its all-time high, that is on 3rd of June 2024 at 5,444. After that, it witnessed a very steep correction and stock has made 39.20 as its low. After that, it has again made a high, all-time high at 5,582, again fizzle out. And third time, it has made an attempt of crossing that high and made a high of 5,674. So if I look at the pattern, when the stock has made 3 times an all-time new high, since then the stock has not performed really well. I think I am looking at this 3rd June 2024 high as a classical distribution pattern. So since then, every high, the stock is losing momentum and just making $100 upside as a new high and then selling it off. This time, after making a high on 9th of July 2024, the distribution is very serious. And I am of the view that the distribution will continue. Now, the support or the very strong support, which we call technically is a double bottom, comes at around 3955, which is a low on 4th of June. So I think in the current downtrend, the stock will continue till 3955. We should not touch the stock right now. If the trend turns, then that is okay. We will revisit it. But as of now, avoid the stock and try to accumulate it only when it comes to 3955.
Okay. Pharma space, interestingly, is throwing up some names. Some of the names, as have already pointed out by Mitesh, stocks like Granules India are making a comeback. We are seeing Gland Pharma up, Lupin, Torrent Pharmaceuticals, Zydus Life, Dr. Reddy's up and about in trade. Within the pharma pack, is there a pecking order with which you're looking at some of these stocks that are in momentum right now, Mitesh?
See, this is one of the sector where Sakshi technically need to be very careful. You can't just buy because the stock is up by 3 or 4% because what we are witnessing is a clear cut bull trap in some of the stocks. So
Okay.
we will be very choosy. In this space, what is looking very promising is one and only stock, that is Lupin. If you look at the way the structure has been built in Lupin as far as quarterly and monthly chart is concerned, it is clearly indicating that the stock is up for a very big upside even from the current level. So 2250, 2300 is achievable. So yes, Lupin is one stock which we are looking at technically from the medium to long term perspective.
Okay, got that. So that's the view coming in on the pharma space again. Let's revisit the India VIX, viewers. There's a sharp uptick on India VIX. It's above the 14 levels now and 14.04, 8.55 near the high point of the day. So the volatility is really high. It's the metals pack that is taking a sharp beating. Remember, this was the index that was sharply higher over the last few trading sessions. Almost a 2.7% downtick for the metals space today. PSU banks are down 2%, autos are down 1.9%, oil and gas is down 1.5%, realty, IT also down 1.4% decline for the broader markets as well. Let's get in Mitesh to comment on the metals pack. Metals pack was definitely looking very attractive with the last few trading sessions. The downtick that we have seen today, is it a buying opportunity within this space? What's your sense?
Great, Sakshi, because if you look at Nifty Metal Index, it has broken 9500 and now index is looking at around 8800, 8500. So there will be a severe cut with respect to metals. So one need to be very careful. See, in this kind of a market, Sakshi, whenever the correction comes in, first of all, it attracts the high beta counters, especially in the F&O segment, or the sectors which are very vulnerable. So I think we put reality and metal both in the same pack. So one should definitely avoid this sector. Even if you look at the daily and the hourly chart, each of the high which is made in the recent point with respect to either Tata Steel or Hindalco or, for example, SAIL is attracting a selling pressure. So definitely it's a avoidable sector. One should carefully take shorts because again, whenever the up move will start, these sectors will definitely attract the first buying interest. But this is from a trading perspective. I think overall we are not that bullish that any of this counter will gain 10-15% from here.
Ladies and gentlemen, 9:51. There is a bit of a battle that's happening between the bulls and the bears at 24,750. Only time will tell. But at this point of time, it would be good to see all-time highs. And the reason why I say that is that in deep pain, you must look at stocks which are making fresh peaks. That tells you where the market is putting in money when there is pain on around. We've discussed Zomato, and as the Nifty has slipped, the counter's gone better and better. 11% higher now. At the moment, you have 260 almost on the board, and I just want to see the volume. Okay, Sakshi, hold your breath. 3,300 crores worth of Zomato has already been traded, and let me just put this in perspective. 5-day average of Zomato is 1,500 crores. So in the first half an hour of trade, double of that, in fact much more of that has happened on Zomato. So this is a breakout, this is a blowout that has happened on very heavy volumes, on a very smart price action, and of course post the earnings tailwind. Whenever such actions happen, they continue for a while. So if you get an opportunity in terms of getting a price dip, that would probably be a good entry point for Zomato. A fresh wave has started. HDFC Bank is being deployed by very smart traders to manage and massage the Nifty. 1662 for you, 1.5% higher. This is the next most active traded counter at 871 crores. So you can well imagine the difference that is there in terms of the first top traded and the second top traded. There is selling pressure on Hindustan Aeronautics, 2.8% lower, about 608 crores worth of shares have been traded. Now other all-time highs are Granules India, Ajanta Pharma, and of course Gillette. So you can see the FMCG and pharma thrust that the market is taking at a time when there is excessive selling pressure as far as the intraday positioning is concerned. Sakshi.
Absolutely. Well, just about 5 minutes to go before we wind up this morning edition. So we'll start slowly and gradually winding up the market right now, as well as the morning edition for you. PSE index is down by about 1.8%. The lone mover within the energy pack today is Oil India, with about 1.6% uptick that I can see as one of the heavyweight movers that are in the green right now. Miteshji, have you been looking at the energy basket favorably, especially these upstream makers? The way ONGC moved up this last entire month, now Oil India of course has been following up with that as well. What's in the offing for the energy basket?
Yeah, see, what is looking promising is, I think, ONGC and BPCL. These are the two counters technically looking very promising from this technical structure, and we are of the view that sooner than later ONGC will enter into a new trading range and will probably in a position to hit new highs. So yes, ONGC and BPCL is looking attractive at the current level.
Okay. Right, let's also look at, yes, Shail, please continue.
Okay, Axis Bank, Sakshi, we'll keep that on the screen. 1157. Remember, the selling pressure on Axis Bank developed the day it came out with a modest set of numbers, and it gave the first red flag for the private banking sector, that things on CASA are not looking good, which means that banks are facing difficulty raising fresh fixed deposits when it comes to the price action on there, because money is now moving to mutual funds. 1157 for you as far as the daily chart is concerned. Miteshji, do you see a minor breakdown on the charts of Axis Bank? Where do you think will market give support to this counter?
1100, 1120 is a very strong support on both daily and weekly charts. So I think Shailji, the stock will drag till that level. On the upside, the reversal will come only about 1200 rupees. So it's a broad range, 11, 1120 on the downside, 1200 on the upside.
Okay, 957, ladies and gentlemen. For the moment, the battle for supremacy between bulls and bears is being fought on the 10 EMA as far as Nifty is concerned. 24,750, and of course on the 50 EMA, as far as Nifty Bank is concerned, 51,200. What's bothering the market is the rise in India VIX. For the moment, this index is up 7.6%, and given the volatility, given the weak cues coming in from Wall Street and from Asia, this is a point of concern. But where is money moving in? As always, pharma, as always FMCG, and money is celebrating outperformance, as you see in Zomato. Sakshi.
Absolutely. Well, thank you, Mitesh, at this point in time for being with us. Of course, the markets are throwing in a lot of volatility as of now, and it's absolutely imperative for all the viewers, investors to be very, very cautious at this point in time, have patience and not take any, knee-jerk reactions to their portfolios at this point in time. Wait it out, let the markets and the dust settle down. This is also a big reaction coming in the way of how the global markets have brought in a downtick as gap down for our markets today. This could settle down. So just wait it out right here within the markets, have patience, and only then take a decision on your portfolios as of now. Over a percent downtick for the Nifty, 24,740. The Nifty Bank down about 0.7%, 358 points lower in trade, 51,206 for the Nifty Bank right now. What's remaining within the green? Nothing within the sectors. Even the FMCG sector has now slipped about 0.1% lower in trade. The deepest shock is coming in on the metals pack, that's now down 2.5% or so. The Nifty stocks, barring 4 stocks, all the others are down in the red. HDFC Bank, HUL, Apollo Hospitals, Dr. Reddy's, they remain in the green, but the rest of the Nifty stocks have all slipped lower in trade. Within the F&O space, still some more green you can see. Godrej Consumer, Granules, M&M Financials, HDFC Bank, HUL, Sun TV. You also have India Cements as some of the stocks that are buzzing in trade. But the sharp lower tick on the F&O space comes in on Cummins India, 7.3% lower. Nalco, 5% lower. Birla Soft, that's another 4% lower in trade. Aditya Birla Capital, GMR Airports Infra, these are the stocks that are taking it on the chin right now. Markets now slipping even further, about 270 points lower, 24,740 for the markets. India VIX up by 8.5% at over 14 odd levels right now. We'll have to wrap it up at that, viewers, but we'll continue to track the market momentum for you and keep coming back to you for various shows to get you an understanding from top market experts as to how are they looking at this increasing volatility and severe downtick that we are looking at today. Will it have some more pain, or will it bounce back sharply as we have seen in numerous occasions in the past run-up in the markets? With that, we wrap up. Thanks from both Shail and me, but we will continue to bring you some interesting conversations around earnings as well. So stay tuned on Business Today.
Rahul Gandhi has been making a case for caste census in India. But the history of caste survey has been a complicated one in India. Every census in independent India from 1951 to 2011 had published data on scheduled caste and scheduled